Welcome options enthusiasts. Here is another session of options trading basics session 4. I will be taking you through all the things which you would require for trading in options in India. Options trading in India is a less penetrated market, so I'm here to give you all the gyan which is required for trading in options using the technical analysis, because I am a technical analyst and I have voracious knowledge in technical analysis, and I have won the technical analysis game in Goldman Sachs. Over there I have won the best trader award, be the best trader award for trading just with 2000 rupees and generating an alpha of 1830 rupees. So I will be teaching you about the options, how to trade options in India. Options trading in India, as I've already told, I have been trading in options in India for past 6 years completely, and another 2 years back from US I was trading in Indian markets itself. So I have devoted almost around 8 years completely trading with options trading in India. So that's what I have been doing for a very long time. So I will be teaching about the options training. I will be taking you through all the things which is required for options trading in India. Let's jump in to the first topic, what we'll be covering in the session which we will cover today. So options trading basics 4 consists of all these things. What knowledge is required for options trading in India? What is the technical analysis which actually makes money? Understanding the chart basics, different types of chart patterns available in the market, introduction to candlesticks, and candlesticks, how to use the candlesticks and make money on a regular basis. I will not be going through very deep into candlesticks today. That will happen in the next session, which will be coming in the next week. So the first topic what we'll be covering here is what knowledge is required for options trading in India. The knowledge which is required is technical analysis, the candlestick pattern analysis, the risk management, and the trading mindset. Trading mindset is very much important because that is what inculcates the risk management as well. So you should not be giving up to your emotions, or you should not be giving up to your intuitions or the hunch feeling or anyone else's whatever the analysis whatever they are giving out. You should not be going with that. You should do your own analysis. That's inculcated with the trading mindset. I will go through the trading mindset very deep in the next upcoming sessions. So now let's go through what else is required. Next, what you would require is what is technical analysis. In the technical analysis we will be talking about all these things which we'll cover. So technical analysis is a pictorial representation and a trading tool used to represent the stock charts. So what I'll be usually covering here is more to do with Nifty. However, I have mentioned represent the stock charts because usually more of the people do get used to the stock trading itself. This whole market itself is called as share trading market or stock trading market. So that's the reason I have mentioned represents the stock charts rather than the index charts. Okay, so represents the underlying assets chart, whatever you choose for, if it is an index or if it is a stock or if it is a commodity, it does not matter, right? It has the underlying assets chart and identify the trading opportunities by analyzing the statistics gathered from the trading activity, such as the price movement, the momentum, the support and resistances, and the volume. This is what is the definition of technical analysis which I have framed it. Okay, so I have given the required things which actually make sense according to me. Technical analysis is defined in this way is what I have portrayed for you. Okay, this is what technical analysis is. Anyone can give the definition, however anyone can't give the definition which actually matters, which actually makes perfect sense. Okay, so that's what technical analysis is. This is the exact definition which I think is apt for technical analysis. Okay, it represents the movement of underlying asset. So this is what it represents. The technical analysis covers all these agenda in it. It shows the movement of the underlying asset, whatever we choose, if it is Nifty or the stock or commodity, or if it is the AUD, that's the forex market, whatever you choose as. Okay, it represents the highs and lows of the underlying asset. So it shows what is the high it is actually going to, what is the low it is going to, everything. It covers most of the highs and lows. It represents the visual pattern of the formation of trend. So whenever the market is going upwards or whenever the market is going downwards, it will show us what is the actual trend which is actually happening. It visually, pictorially represents the support and resistances. What is the support, what is the resistance? We'll cover everything of these technical analysis jargons in the next upcoming sessions, and we will go deep into each and every technical analysis aspect, deep inside. Now let's understand what does technical analysis actually covers. It visually, pictorially represents the support and resistances. What is a support? Support is a place where the market actually consolidates. It actually holds on for about some time in order for it to go upwards. That's the support. Okay, what is resistance? Resistance is a place where it will actually go up above, go to that particular level, and afterwards consolidates at that particular level. Afterwards it is not able to go upwards and it comes down. That is a resistance. Now let's go to the next agenda, what we'll be covering today. Now the next agenda we'll be covering is understanding the chart basics. What are chart basics? How do we look at charts, and what all matters for us in actual options trading for us? So what is the chart basics? It maps the price performance. It shows the pictorial representation in candlestick, bar, or bar charts or line charts. All these are the chart patterns available. Okay, in bar there are two different chart patterns available, that is OHLC and HLC charts. HLC means that high, low and close. It only shows the high, low and close, and OHLC means that it is the open, high, low and close patterns in the bar chart. So the different charts show different information. It sheds light on supply and demand. Supply and demand is the key thing which actually moves the market. It is also called as fear and greed in the market. It is, in other words, called as supply and demand. So it represents the investment roadmap for intraday, daily, weekly or monthly charts. So investment roadmap, why does it show the investment roadmap? You can use technical analysis for long-term investment. You can use technical analysis for intraday investment, short-term investment, or maybe about 15 days or so, or maybe about monthly and weekly and daily. Any of the charts is used for different types of investment criteria. So that investment roadmap is what it represents. It shows us the direction in which we have to invest in. So the next thing what we'll be covering is different types of chart patterns available in the market. So the different types of chart patterns available are line charts. That's the first one. The second one is the bar HLC chart. That's the bar chart with a high, low and close available. And next is bar chart with open, high, low and close available in the pattern. The next is the candlestick charts. The candlestick charts is high, low, close, open, high, low, close, everything is visible. As well, it shows the trading range, and it gives us different patterns in candlestick itself, which actually represents reversal. If it is a uptrend or downtrend, it gives us different types of candlestick patterns as well. So that we'll cover in the later stage of our sessions. So we will go through the different chart patterns available in the market now. The first one being the line charts. The line chart is a type of chart which displays information of as a series of data points called as markers. So the end of this over here to here, it is called as marker. It is a dot over here and dot over here. That is a marker. It visually joins these points, that is the markers. Okay, these markers are connected by straight line segments. So if it is a green line, it means that it is a up move. Okay, if it is a red, means that it is a down move in that particular interval. If it is a 1 minute, if it is a weekly, daily, monthly, whatever it is, okay, in that particular marker, if it is a weekly or if it is a daily or if it is a monthly, yearly, whatever it is, within that particular interval, if it is going down, it means that it will be in red. If it is going up, it will be represented by green in the line chart. It is a basic type of chart which plots the open and close of the time interval. At what place it opened and what place it closed is the only thing which it will represent in the line charts. What about candlestick charts? A candlestick is a chart that displays the high, low, opening and close prices of a security for a specific period. Okay, so this is a candlestick chart. So a candlestick chart includes a red candle, which means that it will actually go down in the movement. If it is a green, it is a upward one. So we will look into that in the next. So the candlesticks shadow show the day's high and low and how they compare to the open and close. Candlesticks shape varies based on the relationship between the day's high, low, opening and close. So this is the candlestick. If it is in black or if it is in red, whatever, you can change the colors. This is represented in black because white with contrast black looks good. Okay, so black means that it is a negative candle, or in other words, in red means that it is a negative candle. So this is the highest point of the day. This is the open, because if it is a black or a red candle, it opens higher and closes lower. Okay, it is the opening point. This is the body and this is the closing point. This is the low point of this particular candle. Okay, it may be a day candle or it may be a 1 minute candle, whatever the interval may be. This is the candlestick analysis. Next, this is the bar charts. Bar chart has bar HLC charts and bar OHLC charts. So bar HLC chart means a bar chart is a style of chart in which the top of the vertical line indicates the high during the time interval. So the bottom represents the lowest price and the closing price is displayed on the right side of the bar. So this is what it will show up when we are using a bar HLC chart. So it only shows the high, low and the close. So this is the highest point, this is the lowest point, and this is the closing point, which represents to the right side. That is the closing of the bar HLC chart. What happens in bar OHLC chart? In bar OHLC chart, in this we will see up at the high, low, close and open as well. The highest point is represented here, the lowest point is represented to the bottommost, and closing price is displayed on the right side. As we have seen in bar HLC chart, the opening price will always be displayed to the left. Okay, so if it is a green, it will be the left and it will be at the bottom, or it will be below the closing price. and if it is a red candle, it will be at the top. The opening will be at the top and closing, that is the right bar, will be at the bottom. Now let's look into the introduction to candlestick, because this is very much important. Let's look into the introduction to candlesticks with an example. So what is a green candle? A green candle means that it is opening lower and closing higher. That is a bullish candle. A bearish candle means that, or a red candle means that it is opening higher and closing lower, right? So there are three main parts to a candlestick. It consists of upper shadow and the real body and the lower shadow. So this lower shadow or upper shadow is also called as a wick, and it is sometimes also called as a tail, right? So with this particular body and with this particular tail and wick, or whatever you want to call it as, there are different types of patterns which we'll see in the next session to come. Now let's look into the example of the candlestick. This is a candlestick. Okay, what is a candlestick? It will have all these levels. The first one is the low of this particular candle. Okay, this is the low. Okay, this is the high. Okay, this is the high it has made. Okay, this whole thing, this top to bottom, what is it called? It is called as trading range. This high, okay, this is just a coincidence, but this high is also the closing of particular high it has in the market. Okay, this is the close of the candle as well, but the opening is this one. This is the opening. It opened here. Green candles always have a lower opening and higher closing. Okay, red candles always have a higher opening and lower closing. This top, open and close, this one is called as the body. This one is called as body. Sorry. So this one over here is the body. The distance between open and close, it is called as body. Okay, so this is a candlestick chart. Okay, it gives us information about the high, low, open and close of this particular candle. Okay, so the whole body, whole range from the top, that is the high, to the low, is called as trading range. From open to close, whatever it is called as the body of the candlestick. Okay, so this is the candlestick chart. So what we will use with candlesticks, or how to use them, is very much important. Let's look into that. So candlesticks can be used to determine supports and resistances. Candlesticks can show us a great trend with good upturn or downtrending pattern in the representation on a technical chart. Candlesticks would help us find momentum build in the underlying assets. Candlesticks itself will show different trend reversal patterns like bullish engulfing candle, bearish engulfing candle, hammer, inverted hammer pattern, hanging man, shovel patterns, inside candlesticks and outside candlesticks. All these will be covered in the next session, that is in the candlesticks only class. So if you are interested in Nifty options intraday trading, so I will be teaching you that. I am an options trading coach and I have been teaching this Nifty options intraday trading for 3 years now. I have been teaching this for 3 years and almost all the people who have taken action are making a daily salary, and I expertise in it. I am an expert in that particular field of Nifty options trading. So if you want to learn intraday options trading, if you want to learn options trading itself and make a daily salary kind of income, I would be teaching you exactly that. I would teach you 3 strategies for options trading: contra trading, traded in the first 15 minutes; scalping can start any time when you start trading; and trend trading, combinations of 6 indications, not 6 indicators. It is combination of 6 indications of a good trend, for which we will know the target, stop loss, risk to reward ratio before entry, with 85% guaranteed success rate, because I have back tested it for almost around 1 year. If you have questions, please do contact me at ashok.rao@exoticinvestment.com. This is Ashok Kumar signing off, guys. Do like this video, give a thumbs up, do share this video, and don't forget to subscribe to my channel for every weekend session of options trading basics. On every Sunday there will be one session of options, and on a daily weekday basis I will provide you the pre-open analysis of Nifty intraday. So do subscribe to my channel, don't forget to subscribe. And this is Ashok Kumar signing off. See you guys. Happy trading, happy money making. See you.